Hi everyone, my name is Hannah Smolinski. This is the Clara CFO Group channel, and today we're going to talk about the PPP loan forgiveness application. It just came out, so this video is all about my initial reactions to it with all the documentation that I've been reading and all of the guidance I've been giving you guys. I finally got my hands on this and I looked through it, and I've got a couple initial reactions just looking through it and kind of some things that I was happy to see, some things that I saw missing, and that's what this video is really about. Also, this video answers a lot of frequently asked questions that you guys are having, specifically around payroll periods and certain utility payments and things like that. So I want you to stay tuned. Make sure you watch to the end because there is a lot of information in here, and you need to kind of keep in mind things that are going to affect you and your forgiveness and your business, okay? Make sure you subscribe to this channel so that you can get the updates, because this is my initial reaction video, but then we're gonna have more specifically about this application because we've got calculations to work through. We've got an FTE calculation that gets a little bit tricky. So there's gonna be more videos to come and you don't wanna miss those. So subscribe now if you aren't already. Okay, so my first reaction on all this is yay. Yay, 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 that we actually have an application to look through, that this is what the bank is going to require. You know, it's like when we got the initial application for the loan to begin with, everybody was, figuring out, okay, I need average payroll costs. I need, multiply 2.5, that gave us something to go on. Now that we actually have the application in hand and it's giving us lots of detail, we know what the SBA is going to care about. All right. So they have given us guidance even in this application. So I think it's a really great thing that we already have it. Yeah, it would have been nice to have it when the original loans were issued. Yes, but hey, they're churning this out super fast. I'm really happy that we have it in hand now. Initial reaction is just, yay, we have it. Let's look through it. So the second thing that I was noticing that I was really excited about, even on the first page of this, is it's describing all the different terminology and stuff that they're going to go through in the application. But one thing that I got really excited about is, how we've always talked about the covered period is the 8 weeks after you get the loan dispersed. So if you get it on April 20th, 8 weeks after April 20th, exactly 56 days, that's how long you have to use the loan. Now, this posed a lot of problems for people who are on pay periods and they got their money in kind of unfortunate pay periods. Like maybe they just ran a payroll and then they got their money the next day. And they're like, wait, can I include that? Can I not include that? Or they were starting to feel a little bit nervous that if they did weekly payrolls that maybe they'd accidentally miss and only able to get 7 in rather than the 8. So the really good news is that they've offered something called an alternative payroll covered period. So this is an option you can have as an employer and as a borrower, where you can say, for my payroll costs, I'm going to apply this alternative period. And so what this alternative period is it says, after you get the money dispersed, you can select you can either use the covered period as is, or you can select to start your payroll covered period at the start of the next pay period. So the way that this practically works, and I even gave an example, and I'm just going to read it to you. For example, if the borrower received its PPP loan proceeds on Monday, April 20th, and the first day of its first pay period following the PPP loan disbursement was Sunday, April 26th, then the first day of the alternative payroll covered period is April 26th. And the last day of the alternative payroll covered period is Saturday, June 30th. All right, so they're essentially saying, hey, if we gave the money to you on a really bad timing for your pay period because it was like it didn't line up, which most people it didn't. I've seen a few people who got it on a good timing on a good day, but if it didn't, then you can shift it, not backwards, but after you get the money, you can shift it to your next pay period, okay? So that could be beneficial for you guys. And this is, again, at election. So you can determine which one you want to use. Do you want to use the 8 weeks as is, or do you want to use the alternative covered period? And one thing I want to say about that is, as they list out the different types of expenses you can get forgiven in the application, it specifically says, do you want to use you can either use the covered period or the alternative payroll covered period. So there's certain things that they don't give you that choice, like mortgage interest payments, you don't get the choice, or the rent, you don't get the choice, or the utilities, okay? That was really cool though, because that is not something anybody knew about. And there's been tons of frequently asked questions about that. So I'm glad that I can finally give you guys an actual answer to that question, okay? Now, the other thing that I was looking at, and the next thing that was kind of a reaction for me, is it listed 4 things that could be included for forgiveness. So we've talked about, and I've got the application right here in front of me, and I'm just gonna be rifling through it as we go through. So the payroll costs, which we've talked about in multiple videos, all the things that can be included in payroll costs, that's one item. And then on the other allowable stuff is the mortgage interest payments, the rent payments, and then the utility payments. Now, I looked at this and I said, wait, what about the other debt obligations, interest payments? Because that was listed in the CARES Act, and then it was listed in some of the other interim rules. So I was thinking, wait, they've listed that multiple times, like kind of as the 5th item that's allowable. However, they're not including it for forgiveness. And now I'm going back and rereading the guidance, and it looks like they're saying, actually, yeah, you can use the money for that other debt obligation interest. So like if you have a credit card that you're paying interest on, or if you have a line of credit that you're paying interest on, you can use the PPP money for that, but they're not including it in forgiveness. And I went back to the original forgiveness piece of the CARES Act as well, and it's not specifically included there either. You know, that's just probably a mix up in, you know, language and people seeing it one place and thinking that it gets forgiven as well. You know, I made that mistake myself. It's in my spreadsheet, so that's getting updated as we speak. So, you know, that's something that now that we have guidance on, we know that that's not includable for forgiveness. Yes, you can use the PPP funds for it, but they're not going to allow it for forgiveness. So the 4th thing that I saw that I thought I would just mention to you guys, everybody's been asking me, what's a utility? What's a utility? What's a utility? Still, they're not really giving us a lot more clarity on that either. So we're just going to have to go with the letter of the law here and continue just reading this really straightforward. So we've got electricity, gas, water, transportation, telephone, and internet access. All of those things would have to be in place before February 15th of 2020, which we already knew was the case, but they still haven't clarified what exactly transportation cost is, or whether or not telephone can include cell phones. I have heard no on the cell phones, that this only includes landlines, okay? And not cable either. And not garbage, which is another thing that you would think is a utility, right? Waste removal. That has not been specifically listed here. So I don't know why they think, or having a telephone is more important than removing the garbage, but maybe they're thinking, hey, if you're not open, then you don't have garbage to remove. I don't know. But this is not, it's not like you have to be closed to use this money. So I'm not entirely sure what the logic is there. The other thing that I thought was really interesting, along with talking about the payments, so interest payments and utility payments, is that they have this specific language that says, count non-payroll costs that were both paid and incurred only once. Paid and incurred only once. And you might, when you read that, unless you are thinking about this from an accounting perspective, it might not make a lot of sense to you. But there's been people who've been asking, and this is a very valid question, is, well, if I pay my bills in April, they might be for services rendered in March or even February, especially if you have like a 2-month, you know, utility cycle or something like that. So what bill do I include? Do I include the April bill, or do I try to get from the period that the utilities were actually incurred? So they're saying you can choose if you want to do the actual paid or the incurred, but the point is that you can only do it once. So you can't count the same payment twice. You can't say, oh, well, I incurred some expenses of electricity in April, and then also I paid the bill in April for March and January. So you need to kind of be consistent here, and they're probably going to cut it off at 2 months of service. They're not going to let you prepay utilities, and they're not going to let you back pay utilities for a certain amount of time. Okay, so be consistent there, and that will be helpful for you as you go and apply for forgiveness. Okay. And reduce confusion, because we don't want confusion when the bank is looking at your application. We want it to be really clear, so they're just like, oh yeah, check, 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 clear, no questions, good to go, okay? The more scrutiny you have on your file, the more red flags it raises, and the less likely you're going to get your loan forgiven if they start picking into the nitty-gritty of everything. It's not something you want to do. When you're handing stuff over to be inspected, you want it to be as flawless as possible. You want it to be really clear, and you want it to just be, oh, this is so obvious. This is so nice. Thank you for making my life so easy. That's what you want when you're putting in the documentation for your PPP loan, okay? Something to think about. All right, so the big thing that I feel like has been very, very helpful when it comes to this application is that they have made the calculation for the forgiveness available, and it's walking us through exactly what to do. So I will do that in another video, and I will put it somewhere where it can be easily found once it's published. Definitely put it in the description, and it'll probably be the recommended video after this one. But we will do we'll go through the calculation for the actual forgiveness. But the cool thing is that they have made it clear now that there are 3 options of amounts that you can get forgiven. And it kind of depends on where you were on the spectrum. So if you didn't get enough money and you spent way more on payroll than you needed to, or to get your loan forgiven, then there's an amount that you use for that. If you got a loan that's way bigger than you needed and you only use like half or less of what you got for payroll, then there's a calculation for that. And then there's also just, if you use the appropriate ratio of, the 75-25, and it's really close to your loan amount, what you actually spent, that's also an option here. So we'll go through those, but this is really important because we know this confirms a couple of things. It confirms that, what you actually spent on allowable costs is an option to get that forgiven as long as the ratios are correct. It also confirms that you can't get any more than what the PPP is. We already knew that. But the third thing, this is the really important one, is that it confirms that if you spent less than 75% of the loan, that is okay. On less than 75% of the loan on payroll costs, then that is okay. What it does is it's going to shrink your allowable costs. So it's going to shrink down your total forgiveness amount, which we kind of knew already. So if let's just say you got a loan for $30,000, okay? So if you got a loan for $30,000, under the original assumption, we were thinking that you'd have to spend 75% of that on payroll. But let's just say a series of things have happened, like maybe you furloughed your workers and they didn't come back to work, and you didn't have your restaurant open, and it just didn't make sense for you to spend tons and tons of money on payroll. If that's the case, and maybe you only spent $15,000 on payroll, which is less than what you should have to reach the 75, then what this calculation allows is it allows you to say, okay, well, I only spent 15. Now I'm going to resize my loan or resize my forgiveness amount to what I actually spent on payroll. So what 15,000 is 75% of what number? Well, that's 20,000. So they're saying, well, you can get forgiven 20,000 because you spent 75% of 20,000 on payroll. All right. So even though you got a loan for 30, 20 of it can be forgiven because you did spend 15,000 on payroll. So good job spending that money on payroll. We're going to give you an extra 500 or 5,000 to use on other allowable costs, like your rent, things like that. Because if you have a restaurant, you probably have rent, right? And that's not just for restaurants. I'm just giving a restaurant as an example because they would be an industry that is having trouble reaching those payroll costs in this environment. That is really good because, that's how people had been kind of calculating the loan, but now we have that really confirmed here that this is what we can look at. And so when we compare these 3 numbers, what you actually spent, what the loan amount was, or what your resized loan was, if you spent less than 75% of your loan amount, you pick the minimum of those 3. So it's going to be really obvious. They're not going to forgive you more than you spent, right? So you put the lesser of those 3 numbers into the application for forgiveness. So that was really helpful for me. I'm really glad that is here. And I think that the calculation looks pretty straightforward. But like I said, we'll do a video going through it, okay? The last thing that I was really happy to see in this application is that they do have a pretty detailed calculation on the FTEs and how to calculate full-time equivalents. One thing that was pretty interesting is that they did not use the SBA standard 30-hour work week. They are using a 40-hour work week, which is pretty interesting. So they have a detailed calculation that we'll run through in another video, but then they also have a simplified version as well. So we'll run through that as well, which also then again allows you to have a little bit of flexibility on which number produces a better number for you for your forgiveness calculation. All right. So those are my initial reactions to this. It is, when you get into it, when you first start out, it looks pretty simple. And then once you get to the back, the FTE calculations start to look a little daunting when you start to go through it. So we'll probably put together some Excel spreadsheets so it'll make it a little bit easier for us. And then we will go from there. But, you know, overall, I'm happy to see the application. I'm really happy to get some clarification on some of this kind of a little bit gray area, starting to solidify a little bit more and get some more clarity. So I'm really happy about that. Stay tuned for more videos. Make sure you're subscribed so you will get notifications about that. And then let me know if you have any questions specifically about the application in the comments below. If you think that you're going to use the alternative payroll covered period, or if you think you're going to use the covered period, I'd love to know that. All right, keep up the good work with this forgiveness, okay? Make sure you're documenting. It does talk about that in here too, is document, document, document. So let's get those loans forgiven. Bye guys.